Well, good morning and happy Friday. Welcome to another Financial Friday episode. My name is Matthew Atkins. I'm the Senior Financial Advisor with Clearbrook Investment Management and also a National Social Security Advisor certificate holder. Hey, last week when I came to you, I talked to you a little bit about the potential of risk and why some people are starting to move a lot of money into cash, particularly mentioned Warren Buffett. I want to give you kind of a picture of what's been taking place in the markets a little bit today. And really, the purpose of it is not to try to predict that something's going to happen. The purpose of it is just to encourage everyone to think through their investment strategy currently, where they have their funds allocated, and whether or not they're in a place that they can tolerate some of the risk. Fall has launched upon us here in the Northwest, and so we have some beautiful colors, but we've also had a lot of rain lately. And so, if you live in this area, you know what I'm talking about, all the wind and the rain. So I want to give you a couple of charts real quick here. Here's the first one. This is of the S&P 500 from January 1st of 2018 till about the third or fourth day of October in 2018. And I'm hoping you can take a look at it here, and you can see that right over here, we're up about 9.58% by that time. So between the 1st of January of 2018 through about the third or fourth day of October, we see this pretty good run up here. And you might be thinking to yourself, yeah, that was a pretty good year. So I want to switch charts with you here and come now to the chart of the entire year. This is January 1st of 2018 through, it's actually January 2nd, but through the end of the year. And I want you to notice something else. Whoa, you see that over there? I mean, we're talking a pretty big shock here. Right? We're down here. We were down at one point 12.06%. Ended up the year down 6.5% on the year. That's not from a low point. That's actually a high point. That's actually from the beginning of the year. So all those gains of the last chart were actually wiped out by just a 2-month period of time at the end of 2018. Now you might say to yourself, boy, why didn't I get out when it was up 9.5%? When it was right here. Why didn't I get out when it was right there? Well, the answer to that is because nobody knew what was going to happen. A lot of people think that they can time the markets, or they think that maybe they could guess the top point of a market. And the problem with that is that in many cases, when we do reach a top point, it's like asking what snowflake causes an avalanche on a mountain. Nobody can answer that question. There's usually lots of factors, and people start simply making a move towards more secure investments. And in doing so, the market tops out, starts to roll over, and the next thing you know, it's on a pretty big decline, and you have that experience we had at the end of 2018, where suddenly there's a bit of a cascade, and nobody really saw it coming. Now, we had trade war fears and all kinds of things last year, but you might say, well, man, if I could have got out, it would have been great. But then the question would be, when would you get back in? I want to give you another chart here, okay? And this is from January 2nd, 2018 to April 29th, so the end of April 2019. So if you pulled out of the market, the question would have been, when would you have gotten back in? Okay, because look at where it was by the end of April. Not up 10% from down at the bottom, down here, but up 10% from the beginning of January 2018. Okay, so the problem with trying to time the markets is that what you end up doing is you end up missing also the run back. And so really the encouragement, rather than trying to figure out what's the top, what's the bottom, when have we hit that, is to look at your allocation and determine what you can put up with. Okay, you might be okay, you would be happy with that kind of gain in April. But could you put up with this down here? Because if you want this, you got to put up with this. If you want 100% of this, you got to put up with this. Now, this is the S&P 500 index over the course of that time period. It's not an investable index, so it's a index that takes 500 stocks and gives us kind of a reading of what's going on in the market. We like to use it because it's fairly broad. So again, you can't get 100% of this if you're not willing to put up with 100% of this. So the real question is, what can you tolerate? And is your current allocation set up in such a way that it aligns with what you can tolerate, not what you want on the upside, but what you can tolerate on the downside? If you're not sure, we'd love to talk with you. If you want a second opinion about your investments, we'd love to talk with you. Give me a call. My number's down at the bottom. My email's down there. I'm happy to send you some articles with regards to things that are happening in the market with in terms of people starting to move towards safety. And if you haven't done that yet, if you'd like to explore some other safe environments, safe investment environments, maybe you'd like to capture your gains, lock them in, and protect them, happy to talk with you about that as well. Hope you have a great weekend, and we'll look forward to talking to you next week.